And everyone, let's check in on another big mover here, Meta stock. This morning, the company's second quarter earnings report yesterday evening marked a challenged business on all fronts. Now, it posted its first ever yearly revenue decline and forecasted its second straight quarter of declining sales. So looking at the shares here pre-market, you're looking at them moving lower by about 4.5% here. Mark Zuckerberg saying on the call, Meta chief executive, of course, saying that we've seemed to have entered an economic downturn that will have a broad impact on the digital advertising business, said everyone almost. So with all of that in mind, this is still an advertising business until they make that multi-billion-dollar pivot and really turn the Ever Given around and try and put that into a metaverse business as well going forward.
Yeah, it was just another call by an advertising-driven company, like we heard from Snap last week, that was very cautious, more cautious compared to what we heard from them 3 months ago, and perhaps so much so, now they have a new CFO coming into the mix too, as well, that will likely put a fresh eye on the business as they slow hiring, which Meta did reiterate on that call last night. They are slowing hiring, but that won't probably show up until sometime next year. But look, their Reality Labs segment, I think it's very important to understand here, is losing large sums of money. That is, of course, their major push into the metaverse. That's where they're dumping a lot of their funds. That business lost $2.8 billion in this most recent quarter. Also includes their various other AR efforts. At what point do they pull back on spending on a business that is generating essentially no revenue right now? There is no metaverse. They're not making any money on this. At what point do you pull back, acknowledge the future potential of this, but pull back a little bit here and try to make a better earnings number and pitch something better to the street?
I mean, revenue in that division was up 48% because of the headset sales. But to your point, $2.8 billion in losses. A couple more things to mention here. When it comes to ad sales, which is still the main driver for the company's business, they're trying to make some adjustments to get around and adapt to both an environment where maybe there's not going to be as much engagement on a Facebook as there is on a TikTok, for example, and also, of course, to deal with the Apple tracking changes. And because of that, they said they're adapting the ad system to do more with less data, a sort of acknowledgement of what's going on. At the same time, Mark Zuckerberg talked about that while they might be lapping those tracking changes, now the economy is slowing, which is hitting them again. So that whatever advantage they might have had is now being wiped out by that. And then finally, the other thing I want to mention is the company's saying 15% of the content in a Facebook user's feed is from accounts they don't follow. On Instagram, the percentage is higher. And all of those figures are going to go up. Yeah. And this speaks to some of the changes that users, particularly of Instagram, have been so resistant to. That they go on these platforms mostly to engage with stuff that they choose to engage with, unlike a TikTok, which serves you lots of stuff. So does an Instagram, does a Facebook, by trying to become more like TikTok, risk alienating its users and getting rid of what differentiates itself in a positive way from those other platforms? Yeah,
just to put some numbers on that, artificial intelligence-driven recommendations from accounts that are not followed here comprise 15% in Facebook Blue, Facebook proper, and then a little more is what they're saying on Instagram.
Like, but do you like that? I don't like that.
I don't necessarily enjoy that, but the percentage is actually going to double by the end of 2023. So it's something that end users are clearly going to have to get used to as well.
You also have to acknowledge, and I liked your word, Julie, alienating. If you're an employee inside Meta right now, you may start to feel very alienated soon because you have a billionaire, I think, on the warpath, and that is Mark Zuckerberg. Just listening to that conference call, it sounds like he's ready to really clamp down of the performance of individual teams over the next 6 to 9 months because the economy is slowing. And if you do not deliver, you're out. And that is a major cultural shift inside of a company that has been aggressively hiring for the past 5 years, especially in the past year.
Well, just one additional add-on here, and we discussed this in our afternoon meeting yesterday, not being surprised if there would be a shakeup at the top. And that's exactly what we saw with the CFO, David Winter, now moving to the CSO, Chief Strategy Officer position. This is going to be a clearly different type of accounting or financial regard that the company has to take on as they still just move full steam ahead with this shift into the metaverse and into VR and trying to make it so that that's their new engagement principle and that's the new revenue.
You know what position that is? That's a position you hold before you directly leave a company. They're just trying to probably work things out.
Yeah, I was going to say, it's not that much of a shakeup when it's like all people who were inside the company already. But yes, increased focus on finance definitely makes sense.